Hey, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial opinions, and make your own financial decisions. Today is Wednesday, November 2nd, 2022, and this is Blockhead Traders Weekly. In this week's episode, I'm joined by fellow Blockhead trader Viper XL 007, and we are going to take a look at the Amazon trade that we talked about in last week's episode, a continuation to see how did that play out. That was an earnings trade playing options, so we'll want to review that. Also today, it was the FOMC meeting where Uncle Jerome gave another 75 basis point rate hike. So we're going to take a brief look back at some of the price action and see what does this mean for the market? Where are we potentially at? Really, we're not forecasters. We just want to practice some of the chart reading skills that we're trying to hone in. But before we hop to this week's content, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, a few of the other Blockhead traders. Love to hear from you. You can find all of my trades, the good, the bad, and the ugly on thetagang.com/sprocket888. And this is also available wherever you like to pick up your podcasts. This week, Viper, we had earnings pan out. I guess technically it was the end of last week, but we touched on Amazon. And that was a trade where I said, hey, look, there's a couple of trades I like to follow. We went through the checklist that I look at. We kind of picked on the episode what strikes I might want to play when it comes to Amazon for earnings week. Earnings week is where you get that super high volatility. You get that contraction. And so, I wanted to kind of touch on that a little bit. I know in the show, we had talked about a 110 strike to do the trade on. And that's a little misleading because on the day of earnings, which is typically when I play earnings, I will enter that trade on that day, and I try to wait as close as I can to the last possible time that I can put the trade on. So if the earnings are after the bell, which is when Amazon's were, I would try to wait to that last hour before close before I put that trade on. And I'm typically targeting somewhere between a 20 and 30 delta put. So in last week's episode, everything we said tracks and is correct. It's just at the pricing of options when we recorded, that would have put us around a 110 strike. And leading into the earnings, if we would have put the trade on, it probably would have been about 100 strike. So leading into the earnings for Amazon, I'll switch over here to Viper's chart. And let me just speak a little bit to it because Viper threw up two yellow arrows here. And the first yellow arrow that you see there, the leftmost arrow, points to when we actually recorded the episode and where the price was for the Amazon underlying. And the second yellow arrow labeled close before earnings is actually where the price was that moment before the earnings trade. And there was a considerable downdraft there on the price of Amazon. And what that did leading into earnings is it really even juiced volatility more. So when we were recording the episode, I want to say the volatility for options expiring that week, the week of earnings, was in the 170% range, 150% range, 170, something like that. And just before close that day, that option volatility was at 220% or 230% for options expiring that week, which is just the super juiced premium. And because that was so high, that really means that the expected move is pretty wide. That's what volatility stands for. Volatility stands for the potential price movement in the stock. And so looking in the 20 to 30 delta range just before close, a 20 delta put, which is where would be the most conservative earnings play I would kind of look at for Amazon, was actually trading at about $2 for the options expiring the very next day. And so you could have sold that 100 put for $2. And what that says is, that says if you are selling that, you will buy Amazon for $100 no matter the price. But in order to give that guarantee out, you're going to collect $2, which is, $200. And that coupon expires the very next day. So that is a coupon that's only good for one day. And so that's actually where the play would have been if we had gone into earnings. And you can see that Viper charted out there the actual price at the purple line at the top as to where that was. And then the bottom purple line, that is where the 20 delta put actually is, that $100 strike. And the break even technically is $2 below that. Because remember, you don't lose money until you pay $100 and you go $2 more down because you collected $2 to buy it 100. So that means your break even is really at $98. And so you look at this chart and you think, oh man, that's a no-brainer. Of course you execute that. Look at that price movement. How could Amazon possibly move more than that? That's a huge move. And that, my friends, is where you get welcomed to earnings.
Yeah. So like you said, let's build on this and expand a little bit more. So first of all, like you said, right here is where you would have made the decision to make the play. Zooming out a little bit, here's the chart on a little larger scale. The yellow lines were levels that we had on last week's episode. So yeah, to get to your break even, you're talking an 11.64% move on Amazon, which, I mean, this is a massive, large company. There is a little bit of maybe foreshadowing on that extreme volatility there, cranked up there at 200%. So I want to put up here, so this is on the play that Sprocket just outlined of expiration at the end of the week. This 1600 hours, close of the bell Friday, you need to be done. Or you're holding these shares with a break-even price on the shares of $98. So let's see what happens here once we start playing this forward and in real time. And from last week's episode, like I said, this 186 levels were on the chart. Our conversations were really focused on the 100, and it wasn't until after recording that Sprocket and I were talking, and I was like, oh man, the 86, that feels wild. That feels insane, but I think you should watch out for that. But, we've talked about...
You brought it up in the Discord, and I was like, no way, man. You're crazy. You're crazy.
Yeah. And then at the same time, you also doubled down of hey, I entered where I'm at because I'm okay holding at your cost basis, which is 104 or 102, something like that. You're fine. Long time horizon holding these shares at that price. But I did get a little spooked that we didn't talk about 86. But let's see what happens here when we... play forward. Earnings happen. Thump. What do you have to say about something like this?
This right here is why I will preface anybody that's starting in this world, don't touch earnings. Do it when you're more experienced. Do it when you're more mentally ready. But I can tell you, as a beginner or as a newbie to this space, you will be sweating like all get out. You will be nervous as all heck. And this is why we stress so much. Be confident in your exit plan. You have to be good with the potential negative outcome, which Viper, we alluded to. I was cool holding these shares. I came to that moment before because, like we mentioned in last episode, earnings are after hours. Options do not trade after hours. So when you see movement with price action after hours, you are at the mercy of the market. You can do nothing until the market opens. And if you look right here at what's just happened to Amazon, we are double the drop that we had anticipated to put our strike at. We had our strike at 100 and we're looking, $15, $16 or $14 below that. That feeling can be horrendous if you are not mentally ready and you are not mentally prepared for any outcome. And so when we say you're buying those shares at $100 no matter what, that is in the back of your mind. And so I personally was like, dang it. But I wasn't in fact, I think I was even cracking jokes in the Discord, saying I'm not leaving, guys. Because I already committed to that trade. I already had that as my outcome. And so once my trades are on, good or bad, that direction is set. My exit plan is set. And the exit to the downside was I hold shares.
Yeah. And I feel like I should have gone back and actually recorded the snippet of audio, but I'm almost 99% sure towards the end of the episode, because we kept saying, as long as you're okay holding the shares, as long as you're okay holding the shares. And I honed in on the emotional part where I was like, it's all well and good to say I'm okay holding these shares, but the first time this happens to you, you go, oh crap, I don't know that I'm okay holding the shares. Like, it's one thing to say it, it's another thing to be faced with that reality. And this is an especially bad reality because, like we said, this $100 level is a pretty solid level. And so, and it's a good long-term buy-in price, but if you get assigned these, your break even is $98. And right now, in these after hours, it was all the way down to 88. I mean, almost to that 86 level, certainly within a reasonable skew of error, margin of error, but you're down $10 on 100 shares already, right out of the gate in your mind. You're not actually yet, but in your mind, you're already way down on this position if you should get assigned. And that just changes everything. And that's why we, like Sprocket said, we'll keep pounding it of this is why you mitigate that risk with small entries to get familiar, to get caught up in this sort of thing, but on a much smaller scale to feel those emotions. Because I feel them every time. Like I wasn't even in this play and I felt it of like, there is just so much panic in this after hours. But let's go forward just slightly because, okay, that's all well and good. Like, I mean, that's the emotions that you feel on that crash. But remember, this yellow vertical line over here, let's make it a little bit bigger, is the end of Friday. And that is when the Pied Piper comes calling to either give you these shares or you expire worthless. So let's keep playing this action forward. Now we're in pre-market, and all of a sudden we're climbing. Pre-market, and the market is almost open. Now we're pre-market, jumping around a little bit. As soon as that yellow goes away, there we go. Market's open. So the market opened, and look at that. We're at $100. Woo!
Now, this is an important thing. I want to frame some of this stuff as we're going to continue on here a little bit, but remember, part of the play here was volatility crush. And that option, like we mentioned in last week's episode, earnings cause huge inflated volatility. As soon as earnings are known, volatility is gone. And so leading up at close, the volatility on those options were at 230%. The volatility at open was like 150%. It's just still high, but you lost almost 100% of volatility overnight. And the price is 10% down. Normally, when you see price go down, volatility goes up. And this is the real power of volatility contraction. Now, as we keep going through the trading day, that volatility just drops and drops and drops. And we'll show you what happens to the price. But this is where there's almost no time left too. So you get volatility crush, theta crush, all of that premium just goes away. So let's play it forward a little bit more, because if you sold this strike, you could have legitimately closed as soon as the market opened and you'd have been green.
Yeah, absolutely. And so what's important to remember, because while we talked about all that panic and whatnot, in this yellow box that I drew here, this is all after hours pricing. So like Sprocket said, the good and the bad about this is your panic. In this particular case, you could not act on your panic because there was nothing you could do but worry and stress, and you couldn't do anything in this price movement here. The good news for you in this specific example, not always the case, is like Sprocket just said, as soon as the market opened, you were clear. it would have been a small profit, but if you were wrapped up in all your emotions and like, I just need out, I mean, certainly been there plenty of times. Luckily, by the time you could have taken action on the position, you would have been good. But let's see. So, we got to keep in mind, if we're going into this with thinking through the play, we want to also think through the price action. And we want to just kind of watch how that happens as the day unfolds, leading up then to this yellow line here, where we would have to make a decision as to if it would expire worthless or if we were going to need to bail out. So as this plays out throughout the day here, the other thing, so that's important to keep in the back of mind. So we've acknowledged the emotional side. That is going to happen to everybody. Let's brush past that, because in the state, like you heard from Sprocket, like he was attuned to this. And so he was looking at this from that price action perspective. And this is where the price action that happens in after hours is so important, and you normally don't get to see it. But pretty much every brokerage or charting tool has an option where you can flip on after hours action. And that was so important in this particular case because we charted 86. If we hadn't looked at after hours action, we wouldn't have known that we actually came down here and basically kissed what we expected in a worst case scenario of sorts. We would have only seen the open price at 99 and been like, like we could still keep going. So let's see what happens as the day unfolds here from a price action perspective. So we know that we've hit 86. We're actually bouncing back as the price opens. So as we move forward throughout the day here, we're going through the morning hours and we're coming up on lunchtime, and right around here, we're getting into lunchtime right there. So here we're at lunchtime.
Yeah, and this is where I actually checked in on this trade. I don't get to watch charts all day, but I checked in at my lunch hour on where is everything at, where would that 20 delta play have been, and at lunchtime, that $100 put, I could have, or you could have bought back for about 5 cents. You sold it for $2. This price action dropped over 10%. And at lunchtime, you could have closed your position for 5 cents. That is a nearly 100% profit. Now, like I said, you could have freaked out and closed on open. That's probably my target is once you hit 50% profit, ring the register, you're done. That would have been around open. But if you would have held on, you could have wrung it out there for 5 cents. And the risk of holding it longer, to me, is not worth it, because 5 cents is $5. Who knows what Amazon can do? Or why are you going to leave that on the table for $5? You pay your $5, you close it out, and you say, thank you for my $195. I'll see you again next time.
Yeah, exactly. And so there's that perspective, which is probably the most important, is just looking at your percentage profit. Because, like Sprocket said, the one thing that has kept him on his options plays at a higher probability of success is keeping that threshold low of 40 to 50% profit. I'm out of here. That's important to keep in mind. So yeah, absolutely. That's probably the number one deciding factor that, at lunchtime here, you see 95% profit, like just get out and just don't even play the game for $5. Like, skip the Happy Meal and you're good to go.
And that's the power of volatility crush. I just want to call it out, because where else can you drop 10% on your play and walk away with a winner?
Yeah, for sure. And the second thing that would also potentially factor into the decision that maybe I should just get out is if we look at from a strict price action perspective. Now let's just keep zooming in here to make this a little easier to see. We've charted this 101.35 in my case on my chart. That level came previously, talked about how we drew it up on a previous episode. But from a price action perspective, what I don't particularly love to see is a gain of this level and then losing the level. Technically it's not terrible, because this pullback here, we actually pulled back to this previous local high here. So we didn't lose that part. So it's not terrible, but also, this isn't showing any like super bullish signs of like, I'm going to gain this 101 and we're just going to blast off. And then this new yellow box here is the time you have left. The clock is ticking. Don't, you're playing games now with this remaining time as to whether or not what is the price going to do in this window. So we'll go ahead and let that keep playing out here. So the clock is ticking, and really everything that's happening right here, you're, like Sprocket said, you're playing for $5. You're playing for whether or not this expires worthless, or you start to lose those profits. And actually, that was closed right there. I put that marker on the wrong, too late. So this is market close. This is expiration, and this is it. Game's over. And luckily, sure, that $5 is now in your pocket. You are above the put. You've expired worthless. So congratulations. Enjoy whatever you're going to buy with that extra $5. But to Sprocket's point, that was really kind of an unnecessary gamble for that last little oomph out of it. That once you got back, even at open, perfectly fine, get out, because let's drill that point just one more time of at open, you're still panicked because of what you saw in after hours. You are looking at open, like Sprocket said, a 10%, 9.62% drop in price, and you could walk away with profit in your pocket. Like, first of all, full stop, that's the play. But had you stuck around, you can see you would have gotten lucky on the rest of the day as well.
I don't want to try to drive this home, because you might think, oh, you're just talking about this. You didn't really play this. You did, because I didn't. I did not buy, or I did not sell the $100 put. You'd be like, it's so easy for you to talk about it. Of course, you're so calm. But I want to actually, I'm in Amazon, but I'm in Amazon at the 115 put. So I feel like I got a little bit more $15 on that. So when I saw that drop, that is more stressful, or could be more stressful than the drop from 100 down there. But that is something that I was 100% comfortable with, and still am to this day. That was my play going in. So, that bottom line, volatility crushes real. Earnings plays are real. They do work. This is why they work. This is the mechanics of why they work. And they are also not for beginners. I will never encourage a beginner to play earnings, no matter what, because anything can happen, and it can be very unnerving.
Yep. And why, even when you think you're ready to play, don't count on the margin. And, certainly the first ones, position sizing, have everything cash secured, ready to be assigned those shares and ready to ride those shares out to whatever end. Because as we talked about before, should you get assigned those shares, now we get into the season of covered calls, which is a perfect plug for our previous episode on the covered call. So what happens when, I'm holding these shares. I said I was okay with it. Now I have them. How do I make it really be okay? And covered calls, my friend, that is where you need to be.
So Viper, let's move on to other news here, and that is the FOMC meeting. Because once again today, old Uncle Jerome raised us up another 0.75 percentage point on interest rate, marking the fourth meeting in a row where we have hiked interest rates by 0.75%. And you might, if you're not familiar with this, think, oh, okay, 0.75%, big deal. Like stocks move 10, 20% sometimes. Who cares if interest rates go up by 0.75%? I would like to frame that for you. In past times of history, we have never historically raised rates by 0.75% in 4 consecutive meetings. In fact, most of the time, a 0.25% hike in interest rates is considered kind of, oh man, they raised interest rates. And this is 3 times that. And that's not in 1 meeting, that is in 4 consecutive meetings. So this, I believe, is the 6th consecutive meeting in which we've raised interest rates. This is all to battle inflation. They started off with a 0.25 point rate. They went to 50 basis point hike, then 75, 75, 75, 75. And you'll hear a lot of things like recession is coming, markets are driving down, and all of this is true, but you'll also hear a lot of people talk like pivotal moments happen as a result of these FOMC meetings. Like, oh my gosh, everything's changing tomorrow because Jerome Powell just did X. And then there is definitely immediate market reaction for all of these events. But one of the things that, Viper and I said, Viper, let's go back. Let's mark each one of these things. Let's see how this plays out in the chart wise. And, we have a frequenter in the Discord who basically is like, news? I don't need news. Because he says news is noise. It can lead you to confirmation bias. It can lead you to see all kinds of other things. He says all I really need to look at is charting and the technical analysis and the price action. And to some degree, I definitely agree with him. A lot of my options trading, I don't ever watch the news. I trade the statistics. I trade the volatility. I don't really follow the news events. I personally believe news is good to keep a hold of for a macro picture, but I don't make any sort of, market plays based on upcoming news events. Steer clear of pharma. Yeah, Viper, we looked at the chart. So why don't you pull up, let's switch over to your chart here. You pull up and talk us through what you're seeing here on this.
Yeah. So I did, because it's the theme of this episode, apparently, I rewinded time again just for a real quick second. Because back here, May going into June, we don't remember exactly where it was, but on the show, we talked about how we were getting into this downtrend and how off of all-time high in the S&P, we were down. And honestly, it was somewhere around here. I think we were right around 20%, so I might not have the date perfectly right. But whenever we were in time, when we were down about 20%, we were talking about, like, where's the bottom? And we talked about the previous cycles of recession. We did a whole chart thing on that. And all I wanted to rewind time for here was, we were talking about, the price action of a pullback from all-time highs. And at the time I charted out and I, called out maybe not a stoppage, but certainly a slowdown here around 3,900, 4,000, somewhere in here. But at one point I did mention to Sprocket that honestly, from what I was seeing, these previous two all-time highs here around 35.88 and 33.88 did not, they felt so far away. They felt like impossibilities. However, they are 100% in the eyes of TA and price action possibilities of the pullback to pull back to once you have failed a new all-time high and started a downtrend. So if we jump forward then and see where we're at today, and lo and behold, I mean, this is not a horn tooting moment, but just saying it's what we should have expected in a matter of speaking. And that matter of speaking is saying we had an all-time high, right? Technically right here, we failed to set a new all-time high. So right in this time frame up here, we should be expecting, TA says, you're going to go test the swing, or at least a previous all-time high, or the swing that made the current all-time high. And, there were stops along the way. So, I'm not saying that this giant gap made perfect sense, but all I'm saying is it was normal to expect that there was a very real probability chance path that we would get to at least 35.88, possibly to 33.88. Here we are fast forwarding in time, simply to say this has taken course along the lines of something that is normal and expected on a pullback. And then the biggest reason I bring that up is because we're talking about these FOMC binary meeting or binary events, news things. Leading up into every one of them, in any particular group or chat or page or blog that you read, somebody's like, Jerome's going to nuke the market again. Here he goes. I wish he just and so there's a lot of this, idea and perception and stigma that he can twist the market with these announcements and these news. But let's take a look at that. So first of all, we're looking at this. We all see the same thing, right? Like we see from a TA perspective, we put in a lower low here. We failed to set a new high. So down we go. We go down. Okay, we cleared up here. So maybe we're in nope, we failed. Down we go. And so we're seeing normal things on the chart here. And now let's look at where Jerome speaks. And these are all the moments that he had these FOMC announcements and meetings and rate hikes. And we charted down here on the bottom the basis points of each of these meetings and each of these hikes, 25, 50, and then ding, 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 75 across the last 4. And what I really wanted to call out is, does this look like anything significant is happening around any of these meetings? Any of them? First one, boom, we're right in the middle of a move, right in the middle of that swing. Second one, boom, right in the middle of a downswing. This third one, we are close, but we were still finishing the move. We finished it, and then we started moving back up, and sure enough, right in the middle, right in the last third, and now present day, who knows what is currently happening, but this is pretty clear to me. Binary events, man, news doesn't really do much but stoke the market with FUD or hype, and that is cooking on an open flame, and you get that, you toss the food and you get the flame flash, poof, like that's all that happens. I mean, it happens every time there is a massive move on each of these. I won't take the time to zoom in now. You can go back and zoom in. You will see big wicks or big candles. They cause all this tumultuous, intraday movement, but big picture, not much happening.
Yeah, 100%. I think I actually, when we first started pulling this up, I had a different theory that I wanted to talk to, and then we started looking at it. I'm like, no, there's nothing here, man. This is just things that happened along the road. Scenic. Oh, that's cute. Look at that. Events.
You were seeking confirmation bias, and all of a sudden, nope, that got shattered.
Because, everybody's tired of down, 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 down. Everybody wants to know, are we rolling over? Are we bottoming? Are we turning? And I'd like to zoom in a little bit here, Viper, and speak to some of this, because one of the levels that you're really eyeing are those white levels on there, one being a little bit higher than the other one, which back in the day I told you, shut up, man, there's no way it's ever going to get down there. You must be nuts. Probably the same me that said $100 Amazon, how could we even get to that? Why would we possibly go lower? So I'm an eternal optimist here when it comes to this, but I think there are some little seedlings trying to sprout out, and yeah, they could get squashed in the coming days. I'm not saying that we're going to grow a beautiful oak tree out of this, but there are some glimmers of potential hope here.
Yeah, absolutely. And what I want to kind of call out about that potential hope, and let's, I don't know a proper phrase for it. Maybe we should invent one, but we are talking about a hope. We are talking about some speculation, but I also want to back it up with proper TA to at least support that hope, because that confirmation bias is super real. I still struggle with it. Everybody struggles with it forever and ever and ever. Like your journey on price action and TA is just constantly fighting back that hopium, that just wanting to tell yourself what you want to tell. But there is, going back, there is the it's a theory, but also reality. You can only go down so far. And technically 0 is the bottom, but nonetheless, the reason we called out these two levels, 35.88, 33.88, when you're coming off of the all-time high, like I said, the first two levels that jump out at me are the previous all-time highs. I'm skipping the gap that we already have crashed through. There were some episodes where we called out levels in there, but immediately, even ignoring that, these two levels jump out as these were significant all-time highs. And what I mean by that is, coming off of them, we got significantly lower lows and thus failures to make a new all-time high. In the pandemic, we had the pandemic crash here, which was exponentially low. Then this all-time high, we actually got a pretty decent drop here and put in two significant lows, So thus why I labeled 35.88 as significant. So needed to clarify that. And if we zoom into modern day times here again, why does this look hopeful? And the reason for that is kind of twofold. This moment here, if we look at this particular candle, this is technically the first time we tested and touched this 35.88. So I said at the outset, once we lost all-time high, there should be at least a portion of reasonable expectation that we're going to go touch 35.88 in this case. So we did. We finally made it here. We got a little bit of bear market rally. Maybe you could call it that. Maybe it was just a bounce. But we had some decent swings to get down here, and we got down here. So this moment here on September 30th is really the first time that we got where we should have expected to go, at least stop number one. We bounced off of it, and we did what we needed to do. Like, so it's rare, but maybe you touch it, maybe you test it, maybe you bounce, and you get that confirmed support, and you're out of here. You go back up, and you start swinging up or whatever. In this case, we initially did what we needed to do. We cleared that and set a new local high, and then we failed it, and we came back down to the level. And then what you notice here is we slipped the level. We lost the level. Even if it's brief, it's a loss. We lost. We closed below. Well, technically we closed below it here, and then we opened way down here, and then we regained the level. So this particular movement here completely nullifies, at least in my opinion, this is my current status, my current state of TA and price action. We nullified this previous test because we put in a lower low. Once we do that, then this is failed. This is a failed test, so we gained again. So now we've gained, and we've actually come off of this local high back here. This slip is not concerning because go back to 2 or 3 episodes where we talked about price action again, and I gave that analogy of climbing a ladder. You want to go up and over and grab. So it's similar. We can slip as long as we come back up and then grab that rung. And so technically we've successfully brought our hand up over that rung because we've put in this new local high, which continues the uptrend of these other local highs, which that's all good news. And then, so I believe Sprocket has some hope here because we're currently pulling back to this particular level here, around 37.50, which, as we were talking, not a bad level to keep your eye on. We could certainly potentially get a bounce there. But in my opinion, because we've slipped, our hands are above the rung. We haven't technically grabbed the rung for support. So I'm totally fine at this point to still come back down and get a close similar to what we had earlier, where we actually close. We don't slip it anymore, but we close back around 35.88 at some point in the coming days and get that support confirmed, because now that level will be tested. And if we bounce off of that, now we're looking really good because we've come back and we've actually tested that. So I think those moves add up to that hope being warranted. But I'm not panicked if we get back to 35.88 because as we stand right now, this is an untested level to me. Maybe I'm misguided. Maybe I need to do some more learning on my interpretation of that. But due to the slip, due to the gain, due to the fact that we have yet to touch it again, I feel like the level is untested. So I'm perfectly fine going back there. And I'm fine going back there because of these higher local highs doing what they needed to do to prove that we have the support to climb.
Yeah, I think that's a great summary there. And I just wanted to bring that up because we talk about price action, and I wanted to put some of that to work as far as, okay, let's just put down in the proverbial internet history books what our theory is on this November 2nd. So maybe we'll wrap up a year-end episode and be like, hey, remember that time that we were like 800 points higher than we are now and we thought we were bottoming? Ha ha ha, joke's on us.
I mean,
Or maybe we'll get lucky and they'll be like, hey, remember that time 800 points ago, way back down there, when we're like, yeah, we're going the other way to the moon.
Yeah, we have
so we'll see.
we have a
Your mileage may vary.
we have a CYA in place. We have 3388. I've very clearly called that out. So we have one more stop to go, and if we lose 3388, then it's egg all over our face, and we'll be the first to smash it on there.
Yeah, we're not financial professionals, right? We're just recording this in our off hours, so we don't get paid for this stuff. We can't be that smart.
Yeah, we're learning with the community. We're learning with everybody. So if we're wrong, tell us. I'd love to know if I'm wrong and why I'm wrong, and then I can try to be more right.
That brings us to the end of this week's episode. I hope you were able to take something away from this. Maybe it's a lesson in the earnings play or some comment that we made that really can prepare you for when you want to take those earnings trades. They are really a ton of fun. I don't want to, make them sound all scary all the time. I just want to frame it so as a beginner, you kind of know what you're expecting. Take that position sizing, take all of that, know your worst case scenario, be truly as okay as you can, and you'll do it. You'll get used to it. You'll feel better about it. And you'll actually, it's really a rush. I love to put those trades on every once in a while with some, go flip a coin type money. And, I'll hop in the Discord and I'll be like, yeah, let's go. Here we go. And it's just a fun thing because you know exactly when the excitement's coming. You get to watch it. It's probably the thrill that, people in Vegas and stuff feel. You can do it in a way where the odds are in your favor. And that's just some of the mechanics of it. And then the other thing I wanted to call out, because it's in the news, is, interest rates, recession, the market's going down. And, Jerome Powell is going to screw it all up again. And you know what? He makes these moves. But in general, the real ruler of seemingly the markets is just simple price action. And there's probably a lot to that because everybody believes it and everybody follows it. Therefore, it is so because it reflects the way that everyone trades. And I think it's very useful to kind of take a step back and say, okay, well, what's happened in the last 6, 7, 8 meetings? How has the giant overtones of the market really changed in that time? And turns out not so much. I mean, they're there. They cause a little bit of noise in the moment, but you're not really drawing any major market reversals from anything that's happened so far. And then if that's true, where are we at in price action? And so Viper and I took a stab there to say, where do we stand in the world of the market and price action? And with our rosy colored glasses, we're like, yes, I can see hope. I think of, was it Jim Carrey in Dumb and Dumber? It's like, you're telling me there's a chance. And there is. I mean, you look at it and there are the seedlings there of a potential move. We're not in, freak out of that loss of that level that the Viper had called out there that started the previous all-time high. And it's just what it's all about. It's about just learning the market, feeling the market out, and learning through experiences and others' experiences. So I hope you guys have a great rest of your week. Probably the next number to look forward to is the jobs reports coming up. There's more inflation data that'll come out in the month of November. And then once again, we'll get one more FOMC meeting here in December, and we'll see what happens there. But like I said, those meetings don't really shift the overall price action. So good luck out there. Have fun trading. And remember, think outside the block.